And now, introducing my friend, Sun Group Wealth Partners Managing Director, Winnie Sun.
Taxes today or taxes tomorrow. The traditional IRA allows your investment earnings to grow tax deferred until you withdraw, which is normally at retirement. Your IRA can be deductible upfront, which means that you don't pay any income taxes on those contributions upfront. With the traditional IRA, you might be able to claim the full income tax deduction for your contribution, but you'll want to check with your accountant on just how much you can and cannot deduct. But either way, you're always able to contribute, so as long as you have income. If you have a 401k at work, this might impact how much you can deduct, so once again, check with your accountant. The Roth IRA is one of my all-time favorite accounts. If you got plenty of years before retirement and you're really savings-minded, you want to consider this option. For the Roth IRA, there isn't any upfront tax deduction, so you basically pay all your taxes upfront, but your investment and your earnings grow 100% tax-free. Yes, I said it, 100% tax-free. And here's a tip. In case you think your tax rate will be much higher at retirement than where they currently are, or even if you think they'll stay around the same, the Roth IRA is a worthy contender. However, if you think your tax rates will be lower at retirement, then you really should think about opting for the traditional IRA. Your annual contribution. With the traditional IRA, you need to be under the age of 70 and a half in order to contribute. There aren't any income restrictions on the traditional IRA. However, you will want to start taking required minimum distributions, or RMD, at the age of 70 and a half. If you don't, the IRS will start collecting penalties of up to 50% of what your RMD is. With the Roth IRA, there aren't any age restrictions for the contributions, and the contributions are made with after-tax dollars. So the earnings can be withdrawn tax-free without any penalties after the age of 59 and a half, as long as your account has been open for at least 5 years. And the Roth IRA has no RMD calculation, so no potential IRS penalty on those RMD distributions either. Penalties at withdrawal. A traditional IRA incurs a 10% penalty on any withdrawals made before the age of 59 and a half. A Roth IRA is much more flexible. You can withdraw the contributions you made into a Roth IRA at any time for any reason, tax-free and penalty-free. However, it's just the earnings on those contributions that will be subject to a 10% penalty if you withdraw them before the age of 59 and a half. The traditional IRA doesn't have any income limits. However, if you participate in an employer-sponsored retirement plan like the 401k, you might not be able to deduct the entire 401k contribution. So I recommend chatting with your accountant with questions just like this. As for the Roth IRA, there are some income limits which determines whether or not you can contribute. To make the full contribution of $5,500, there are some income rules. If you're married and you file taxes jointly, you'll need to have a modified adjusted gross income of $183,000 or less. If you're single, your AGI needs to be $116,000 or less. However, it's important to note that the backdoor Roth IRAs, or what we call Roth conversions, are open to everyone regardless of income. So reach out to me if you'd like to learn more on this. The Roth IRA has another benefit. If you've owned this for more than 5 years, you can actually withdraw up to $10,000 of your earnings. That's in addition to your entire contribution principal to be used for your first home purchase. The traditional IRA also has some benefits. Contributions to it lower the taxpayer's adjusted gross income, or AGI for short, potentially qualifying you for some really great tax incentives. So in a nutshell, traditional IRAs can make a better choice if you're seeking a tax deduction now, if your income is too high for you to qualify for the Roth IRA, or you expect to be in a much lower tax bracket when you retire. On the other hand, the Roth IRAs can be a better choice if you're looking for tax-free withdrawals in retirement, have a long time to invest prior to withdrawal, or you expect to be in a much higher tax bracket in retirement, or if you just want to avoid the required minimum distribution starting at age 70 and a half. Thanks so much for tuning in, and for other great videos, please subscribe to our YouTube channel right below, and follow me on LinkedIn, Twitter, and Facebook. So until next time.